Good morning still. Kind of funny timing on my last video. I talked about the market reacting well and being up, and now it's down about 40 or 45 handles. I still think today's a good day as any, but I'm not a financial planner, I'm not a lawyer, and I'm not an accountant. So use the information on my channel for entertainment purposes only, and reach out to your financial planner, your accountant, or your lawyer for any financial decisions you make. So, what do we have going on? A whole lot of things in the market. We have what look like a bunch of large investors making a run on the banks and call it good morning.
Good morning.
Sorry, somebody walking the other way. Making what looked like a run on the banks, but everybody's got a good story as to why they do things. And to be fair, if you're managing the money in a bank that you see issues that it could be in jeopardy, you'll want to pull that money from that bank and maybe unintentionally cause a problem. The issue I see as the outsider is, can that become an on purpose type of thing, which is where the Fed's got concerns and going to have to implement new rules to protect that from happening. Now, I don't think that's the case that happened this time. I think that the, the people that tried to set up accounts to get a little bit better return on their investment versus being totally insured from any downturn. If you have 50 or $100 million and your option is to get 3% return on it or a quarter of a percent, but it's insured better, I'm guessing a lot of the people, even the viewers, would want your 3% and just keep an eye on it because it's a major difference. When you look at the big banks and that they haven't done anything to raise their rates on the CDs and deposits, good morning, while some of these other institutions have given good options, well, I'm not surprised to see money leaving some of the bigger institutions and going to the others. And then if some of the smaller ones become bigger, then they can have these issues with those deposits. Thing is somewhere along the line, while I get the thought process that they probably didn't expect that much demand for money being withdrawn, when the treasuries turned and were going the other direction, they had to market to the right price and not just figure they'll wait 30 years and it'll all work out just fine, because the risk short term is there, and somebody is choosing to ignore that on some level. It's hard to imagine if I've bought X dollars of treasuries at a bad price and know that there is a potential that I might have to sell them, that should show up on profit and losses, and we should have to make adjustments to the risk because of it. To I'm not sure what other way there is to that. I think it's a huge mistake not to deal with where markets are at, because you don't know where they're going. I mean, how many times do I say that and reiterate about, even the suggestions I make as trading, to make sure that overall risk management, at least to me, is on the low end. I might risk 100% of a trade, but I'd like to think that the amount that I'm risking on that trade is something that I can handle. I wouldn't want to take down my entire business for one trade and being stubborn about where the market is in relation to the position I have on. I think that's really what goes on when this happens, whether it's years ago with companies like Enron or whomever. I think a lot of times you get a trader who has something go against them, doesn't want to take the loss. You know, look, I don't know what happened with Sam Bankman-Fried, but I'd be willing to bet it's a similar type of thing. I saw an interview with I forget her name, the the young lady who was his girlfriend, I think, and also high up there. She's a really smart girl too. I mean, I've seen she got all sorts of accolades growing up and everything else. But in the one interview I saw with her, she made some reference of when somebody was questioning their decision making on trading. Her response was something along the lines of, well, we just take really big risk and it tends to work out most of the time. I don't know that that's accurate. Please don't quote me on stuff. I just going off a memory of a video I saw. So even the I haven't done enough due diligence for you guys to take me at my word. So these are just my opinions. But as a former trader, when I think back to what I used to do when I was a kid, yeah, it's exactly what I did. I was trading my own account and I was too stupid to know better. So I don't want to say it as if I'm saying it now like it's some calculated decision, but I was trading currency futures on the floor. I'm trading 10, 20, 50 contracts at a time. It's huge risk. I didn't have, like, I wasn't in the position. And generally, I was just stubborn. If the market went against me and I was on the buy side, I would generally buy more. And if I was on the sell side and the market went against me, I would generally just sell more. It's a terrible way to trade, but it worked out for years. I don't mean to justify it. I had some terrible, terrible days. Um, and I sure wouldn't do it now, especially when I think about the size of those trades. And it's funny to me that I'm in a better position I was then. But when I trade currencies, I don't think I've had more than 4 contracts on. Like, I generally put on a one lot, which I would have gone to lunch with 10 contracts on and not thought too much of it when I was 25 years old. So I kind of wonder if the bank guys and some of these big traders are similar. They take the other side of customer orders and they know when the volume gets heavier, that's when the panic is coming in. So if the volume's heavier and it pushes further, maybe they just take on more and more and more until the volume subsides and hopefully it reverses. But sometimes it doesn't always reverse. If you do it long enough, eventually it does follow through. You know, short term can even be years, that markets don't get out of hand. But pretty much everything you trade will have times when it does get out of hand or where it goes much further than you expect. And you have to prepare for those too. I think these banks probably weren't prepared that it could keep going. Powell's been very clear that it's going to be longer than people expect. I still think it's going to be longer. I still think that shouldn't scare you out of markets. I think if you have your job and your life is secure, you can't make your decisions based on if I lose my job. You have to keep that in account and have some money saved for the timeline that it would take to find a new job. But you'd have to presume that you're marketable, and if you financially are in the right position to go buy some stock or a home or a collectible or whatever it is. I mean, putting money away is a good thing. Letting the economy scare you, I would say, is a bad thing. I don't want to make a bet that we're going to have a 1929 type of crash. We've had it once. We've had some really bad financial scares and we had the 2008 housing crisis, which turned into other things as well. But we seem to work through them. And I'd like to think this is no different. Maybe I'm wrong, but I don't want to plan for 1929. I want to plan for things being okay. And when things look scary, I get a better deal. Look, I was buying Peloton up at the highs. I got caught up in the hype. I don't want to say anything like I'm better or I know better. The whole point is I don't. So the guys who think they do, they don't either. Or they wouldn't be on here. They would just be making zillions of dollars doing what they know to be true. I think it's funny when they tell me they know it to be true. My point is, if I still like Peloton, wouldn't I want to get some at $10 a share when I was okay with it at 170? Maybe they go out of business. But nothing has really changed. I mean, they've had to take on some debt to raise some money, which that's not wonderful. But I saw them in a space that I thought they had a good hold on it. I still think that's the case. Their customer base seems very loyal and whatever else. So if it goes to zero, because I know that when I buy a Peloton or Rivian or Snowflake or Shopify or things that I know nothing about, that could be a bad trade and it could be a bad position. If I buy Amazon, Disney, McDonald's, Microsoft, you name it, Walmart, who cares? I would like to think that they'll weather the storm and that in the long run, it pays to be invested and that I might take some short run hiccups. I told a story about McDonald's and buying it as a kid, and I think I was off. And to be honest, I think I was off almost double. But my $2,500 investment would be somewhere around, I don't know, 200 over 30 some odd years. And even if you count it as a $10,000 investment and did the math, because I had a bunch of losing stocks that went to zero as well, and the total investment was 10,000 over 34 years, I'm guessing I've done better, but not hit it out of the ballpark in comparison to other things. So, you know, long term, good companies, that's what you really aim for, and to stay invested and not worry about the ups and downs. Because the point of that, which I almost forgot, was you didn't even see me do that, was during those 33 years, McDonald's fell in half, I don't know, 3 or 4 times. They had this general pattern. It would go from like high teens to low 20s up to like $60 or $80 a share. They'd announce a split. People would get excited, which is when I would sell my stock like a dodo. And then the stock would fall again after the split, and it would generally fall back into the low teens or low 20s or high teens and repeat the cycle. Well, that means plenty of times if it got up to 70 or 80, that means 35 or 40 after the split, falling down to the high teens. Well, that's scary if you bought it at the high 40s when they announced the split, when they announced the split and you were excited about the company. And my guess is when it was down near the lows, there was probably some earnings report or something that came out that wasn't so wonderful and might scare people too. But if they lasted over 33, 34, 35 years, even if you buy the highs, I think you just stick with it, maybe even keep buying more. Diversify and spread out. Don't put your money in trades And don't start trading currency futures like I did. That was just dumb luck of a kid. I mean, I talk back about it. I kind of laugh. Anytime I would walk into the equities pits, I would get crushed. The reason is so you guys know too, I always think stocks are going higher. So I would go down to the pit and day trade. Well, day in and day out, it doesn't always go higher. So I was too bullish. And anytime it would go against me, I would just get clobbered because I just thought it was going higher. The best thing for me about the currencies is I didn't know anything about them, didn't have an opinion, so I would just trade the price action, and I would buy if I thought it was going higher and sell if I thought it was going lower. I was stubborn because of who I am and would add on to losing trades, like I said earlier, but I wasn't stubborn the same way I was in the equities. And I was on the floor during the internet bubble. So when the NASDAQ collapsed, the currency pit slowed down. And I would walk into the NASDAQ and 2 minutes later be down a ton, like, whoa, what just happened? So, anyway, that's separate. My point about McDonald's is there were lots of 50% retracements, even as it moved all the way up over those years. So don't listen to these short-term guys telling you what's already priced in and what they see on the news when they probably really don't know anything anyway. One of them who's talking about the housing market's going to collapse 50% from here. When I questioned, do you own your home? And his answer was yes. I could tell he kind of got annoyed with me with my follow-up of like, so why wouldn't you sell it? Because he knows he's not always right. He's not going to say it like that. He'll give some other answer of, well, I'm not going to move my family or this or that. But there has to be some recognition of he bought good and he's got a low interest rate. And geez, what if I did sell and it didn't go lower and I couldn't make all that money? So no, as much as I say it's going to fall 50% or whatever it is, I wouldn't really put on that trade. Well, then maybe you're not so sure that it'll fall the way you think. Maybe. I don't know. Maybe you do. Maybe there's good reasons not to. Anyway, chime in, say hello. People wanted a little bit longer talking, so hopefully you liked it.